Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This video is being filmed on Monday evening for Tuesday, 04/14/09. And traders, like it or not, this thing has been showing signs of bullishness. Do you see it? I've been seeing it. We have been a cautious buyer of dips, and we will remain to be buyers of dips until the analysis tells us differently. So far, analysis tells us that this thing wants to still continue to move higher. Traders, don't forget, the whole large picture is that we are in a major bear market, but we've had this bull market rally. You can call it a bear market rally. You call it whatever you want. But being that we're day traders, it looks like a bullish rally for now, and until it flips back to a bearish decline, we will be buying dips. With that in mind, traders, for you technicians out there, many technical analysts out there must realize that all the indicators right now are basically pinned towards the upside in the overbought areas. What I do in situations like that, I look at the formation on the chart over the indicators. And there are times where formations take precedent over indicators, and I am choosing tonight into tomorrow, Monday night into Tuesday's trading, to choose formation over indicators. I have done videos like this before, traders. I have done live classes at my site at the Emini Trading Academy, and I have illustrated that there are times where you need to take formations and let them take precedence over the indicators. Tomorrow is our day for trying that. And hey, look, if they suck it to us, we got stops in, right? If they send it down, we'll figure out what to do with it because we're day traders, and that is the beauty of being a day trader. You get in, you get yourself back out. If markets change complexion, you can get in a different way. So day trading is a great way to get this done if your trading is accurate. Now, traders, one of the things I like to tell all of my students, my Omniacs out there, is try not to ever take positions home through the close. Meaning, if we'll take the S&P, for instance, we do trade lots of markets, but S&P is our mainstay, so we'll stay with that as the example. If you are long, short, whatever in the S&P, before the 4:15 EST/OST Omni Standard Time, before the 4:15 close, you get out of your position. Flat, no position. What does that do for you? That puts you in a beautiful spot because when you do your analysis tonight for trading tomorrow, you will not be jaded by your positions. In other words, if you were long and you went home long, I don't care who you are as an analyst, you will find 15 reasons analytically to call the market bullish tomorrow, even if it looks bearish. That is human nature, and there's no way around it. So what I tell my Omniacs is do what I do. Get flat, get clean, get out of the market before it closes, and have a completely unbiased opinion when the market opens the next day. That's what I'm willing to do, and I hope you're willing to do that. With that in mind, traders, let's go take a look at some charts right here. I want to show you what I'm talking about. Okay, traders, this is what I am talking to you about. This is what the point I'm trying to make. Let's look at this chart right here. First chart is the S&P June daily bar. That's the U.S. stock market, so to speak, right? As of Monday's close, 4/13/09, this market has maintained levels above the Omni proprietary moving average. Now, a successful test of the head and shoulders formation is our next major hurdle. Now, when I say indicators are taking precedence, or the other way around today, formations take precedence over indicators, here's what I'm talking about. If you are a technician, I'm not going to bore you with 5 or 6 or 10 indicators. You know which ones I'm talking about, stochastics, moving averages. Well, let's leave the moving average out for a moment. Let's say stochastics, RSI, CCI, you name it, Bollinger Bands, all of the major, most commonly used indicators. If you look at them all right now, traders, almost all of them are up in their overbought areas, right? But what can happen when indicators reach an overbought area? they could stay pinned in that area and just go up and down for weeks on end while a market rallies. So if you have indicators pinned, but your formation looks strong, then formation takes precedence over indicators. Now, formation. Yes, we have this V, what people are calling a bottom. I don't know that I'm calling bottom for the whole market, but for now, certainly has been a little V bottom, right? Then we've had a series of market rallies, comes off just a couple of days, puts in a new high, comes off a couple of days, and starts for new highs again. That's a constructive market, traders. The formation's constructive. The Omni average is now below the S&P. Constructive formations. Next hurdle is the test right here above or at least through the middle of the head and shoulders. If we could take that out, traders, we got a market on our hands. Who knows what it means? But I like what I see for now. And again, until the analysis points to something different, I am a buyer of dips, expecting this to at least get into this area somewhere above 900 and see what's going to happen from there. Now, traders, you know me, if it were just the S&P chart itself, I probably wouldn't be considering a buy here. I would stick to being a bear and get short every rally, but that's not the only chart that looks interesting. Let's look at a few more. Traders, the next market you are looking at is the FTSE, Financial Times Stock Exchange from London. Hey, our European fans, nice to have you, David. Thanks for showing up. Here's your chart, traders, the FTSE. I will say this, it has failed at the Omni average each time it's gotten there, right? You can see that. However, the Omni average is beginning to bend its way back up. The interesting thing that we're seeing here is, like the S&P, you've had a nice chart rally lately, and you're getting the same sort of thing, a rally up, just a few days down, a rally up, and a few days down, and a rally back up. What's more important in this picture is you hit the top of the channel, you hit the bottom. You hit the top, you hit the bottom. You just failed at the top, just missed it, hit the bottom, and it's on its way, and likely back to the top of the channel. So the London market looks pretty strong. The U.S. market at this point right now on Monday evening going into Tuesday looks pretty strong. Yes, there is big news coming out tomorrow, but we trade technically. We don't trade the fundamentals. They always come out in the charts first. So I am going with chart formations. So you've seen the U.S. market, daily bar. You've seen the London FTSE market, daily bar. Let's look at another chart here. Traders, you are now looking at the Dow Jones Transportation Average, and once again, look at the pretty channel it's been in. Top of the channel, bottom. Rallies up, top of the channel, comes down, hits the bottom. Rallies up, hits the top of the channel, comes down 2 days ago, hits the bottom, and rallies itself up above the Omni average as of the close on Monday. So go Transportation Average. What would stop it from at least coming up here and testing the top of that channel? You're nowhere near the head or the middle of the head yet. You still have this testing area that we should get to. Failure there talks about a completely different video, but we're not there for now. We are day traders and we're on our way up there. The only way to know what's going to happen, of course, is to ride this thing a little bit and see if it wants to get there. There is the head and shoulders. We did come off afterwards like you're supposed to. Now the test of the middle of the head. That all makes sense, traders. That's what you'd expect if you're an analyst looking at this chart. We get above or breach the middle of that head, traders, and I'll do a dance right here on camera for you. Let's see what happens. All right, traders, let's look at a couple more charts here. Okay, traders, next on the menu here is the Dow Jones Industrial Average. Now look at this one. Above the Omni average, go Industrial Average. Maintaining this support line all the way up here, here, and here. What's more important is look at the major resistance right here. It's lined in red for you, right? Major resistance. We're heading for it now in a really nice, smart-looking trend. And why not at least take that out and see if there's some stops above it? It makes sense to me. Traders, we did stop cold here, and we stopped cold here. But we're now above the Omni average, where in this case we were below it here and here. We're above the Omni average now. As you might imagine, if you're a technician, you have to open up your eyes to this and say to yourself, hey, yes, we're in a bear market, but we could easily end up taking this out and having a little run up here. Now, once again, of course, there's another Head and Shoulders, the same one you've seen in all the other U.S. charts. You're going to have to test the head at some point, and that's what we're hoping to see. Now you've seen a couple of international markets. You've seen a couple of U.S. indices. I would like to show you another chart that should open up your eyes a little bit because, boy, oh boy, is this one looking very strong. Let's look at the next chart. Okay, traders, we are now looking at another international market. This is the German DAX daily bar chart. The German DAX, and let me tell you something, traders. The first one out of the indices to get above its previous lows, which were back here, right? Made the lows, boom, boom, went down under them. First market to come out above its previous lows was the DAX, and it's put in this very nice inverted Head and Shoulders where you have the left shoulder and the head. The right shoulder, as you can see, I have some question marks. Will this fill in? Well, most likely it will fill in. And if it does fill in, you have an inverted bottoming looking pattern at the bottom of a really, really long bear market, which is when you would get a bottom pattern like this. So there are some signs of life. You're reading it in the newspapers and seeing it in the charts, traders. Make sure you do your own homework, pull your charts, see if it looks like this to you, and if it doesn't, make sure you come on down to the Emini Trading Academy and give me your opinion. We love to have opinions there, and we'll match wits and see if we can come up with where this market will go next. So, traders, you see those charts? Now look, I didn't just look at U.S. charts. You see, and I started to show you some international charts. The Nikkei also looks like a runaway train right now. Traders, again, keep the brakes on here for a moment. We are in a bear market overall, right? The whole picture, bear market. However, at some point that has to come to an end, right? I don't know, and I'm not here to say the bottom is in, but I am here to say I'm a buyer of dips. I'll tell you right now, until this thing cracks me on the downside, I am buying dips. Traders, I never thought I'd say it this year, at least the first half of this year. You've already seen me take Don't Fall in Love with the Upside off the board a couple of weeks ago. Before that, we did a video. A fundamental shift is taking place here in the markets. I see markets beginning to turn. Traders, that has to be 2 months ago. We've had constant strength in the market since we've done that video. I know my videos have nothing to do with market movement, so obviously fundamentals do come out in the charts first because that fundamental shift video was all about the analysis. So I say, technical analysis, you go, baby, you go. You can't beat it, traders. Okay, while we're clapping, traders, the Money Show at the Mandalay Bay. We are doing the Money Show. We got a booth. We have a speaking appearance, and we will be there from May 11th through May 14th. Book your airline tickets. Get your butts on down to Vegas and come join us, baby. Yeah! I will be there. I will spend time with all my OmniX as I did the last 2 trade shows I've done. We'll get to meet. We'll get to hang out. This is all about you and me, traders. I don't really even care about the show. You can ask anyone who knows me. I'm showed up for the OmniX that are going to be there to support me. I'll be there to support you. So thank you so much for coming out OmniX. Traders, the trading contest at the site started on Sunday evening. Good luck to all you traders at the trading contest. And I might as well get it out on video. Traders, I said the word luck. I know. We don't use it at the Omni Trading Academy. We never say good luck. What we say to one another is up yours. It's our term of endearment. So up yours, OmniX, for a good day tomorrow and to win that trading contest. All right, traders, we have a green Omni for tomorrow in the S&P. I've done homework in S&P, NASDAQ, Euro Currency, Dollar Index. I looked at the ETFs, and I looked at, I don't know, 150 stocks. There are a lot of stocks that look like they're bottoming, traders. About 5 or 6 videos ago, I did a video, and I told all you OmniX, I looked at 500 stocks over the weekend, and 300 of them look bullish. We have been slowly working our way higher. I looked at more stocks this evening, and I gotta say, some of them look pretty good. So, hey, maybe we actually have a little more time on this rally that we're witnessing. Maybe it'll just keep going. Who knows, right? We're day traders. We'll take it one day at a time. All right, traders, make sure you come on down to the site at www.livewithoscar.com. Grab yourselves a free membership. Come on into the chat rooms. Come to my classes and let us help you be a better trader. All right, traders, I'm getting out of here. Give me a buzz anytime, 702-629-4755. And don't forget, say this to yourselves every morning, every afternoon, every evening, because it'll help you keep your emotions out of trading. And you know what that is? Stops are in. Emotions are out.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.